Dear students, so in this video, I'll be solving first variety of problem, that is when separate set of books are maintained. In the last video, I have explained the accounting treatment. I have explained all the ledger accounts, joint venture account and co-ventures account, and how to prepare the joint bank account. So for that, now I'll be solving the first problem. I'm analyzing the problem. One problem I'll be solving, and second problem you have to do it by yourself. Mohan and Babu entered into a joint venture to construct a building. So Mohan and Babu, they are the joint venture and they are entering into a joint venture business to construct a building. They opened a joint bank account into which Mohan deposited rupees 1 lakh and Babu deposited 50,000. This is nothing but capital. So this should be recorded in co-ventures account, not in joint venture account, because this is like capital. They are not an expense or they are not an income. It should be recorded under co-ventures account. The payments from joint bank account. So out of joint bank account, they are paying these expenses. It should be treated as joint bank account in the joint venture account. Wages 25,000, cement and other materials 85,000, administration expenses 18,000. So these three are going to become expenses which are met out of joint bank account. It should be treated as joint bank account in the joint venture account. And Mohan paid 70,000 for purchase of building material. So here the Mohan, he is incurring expenses out of his pocket. So now we have to treat this transaction to Mohan itself. If it is paid out of joint bank account, it should be treated as to joint bank account, and if it is paid out of pocket of Mohan, then it should be treated as what? Mohan. And Babu paid rupees 9,000 conveyance charges. Now so to Babu, because he is paying out of his pocket. The venture was completed. Now the venture was completed. The balance material was valued at rupees 12,000, which were taken over by the Babu. So the materials will be taken over by the Babu. So it should be recorded in joint venture account, credit side. So materials taken over. The contract price realized was rupees 3 lakh. This is like sales. So by joint bank account, realized when we have received. So by joint bank account 3 lakh, we got it from this contract. Profit and losses are to be divided in the ratio of 3:2. So profit sharing ratio is 3:2. So pass necessary journal entries and prepare ledger account when separate set of books are maintained. So now we have to pass the journal and we have to prepare the ledger account. Now we will be preparing the joint venture account. So joint venture account I have already prepared. So let me show how it should be prepared. So now again, Mohan and Babu entered into a joint venture to construct a building. They opened joint bank account into which Mohan deposited rupees 1 lakh and Babu 50,000, and the payment made out of joint bank account 25,000 plus 85,000 plus 18,000, it becomes 1,28,000. So they are paying out of joint bank account. It should be treated as what? To joint bank account 1,28,000. So this transaction is over. Mohan paid rupees 70,000 for purchase of building material. So it is paid by Mohan. So we have to treat it as it Mohan itself, in bracket purchase of material 70,000. Same way, so Babu paid rupees 9,000 for conveyance charges. So here we have to write the name of the Babu. Paid conveyance charges rupees 9,000. So and the venture completed and the balance were taken over by the Babu. 12,000 for rupees 12,000 material taken over by the Babu. So by Babu, material taken over 12,000. So after that, contract price realized, we have received 3 lakh from the contract. So we are receiving the, so further by joint bank account, because contract price realized 3 lakh. So now here credit side is more. You will be getting 3,12,000 and you will be getting the balance in figure 1,05,000. So this is called as what? Profit on joint venture. This profit on joint venture should be distributed to the co-ventures according to their profit sharing ratio. So 3/5, 2/5, 63,000 and 42,000. So we have to share. After sharing, after completing the joint venture, this is how we have to prepare the joint venture account. It is very easy. Now let us prepare the co-ventures account. So I have drawn the columns Mohan Babu and inserted two columns for co-ventures. So now first the Mohan and Babu, they are introducing the capital. So by joint bank account, so capital introduced, Mohan is introducing 1 lakh and Babu is introducing 50,000. So after this transaction, then we have to make the double entry. So here, come to the joint venture account. Mohan, joint venture account data to Mohan, joint venture, so joint venture account data to co-venture of Mohan, and joint venture account data to Babu. So material, okay, joint venture account data to Mohan, joint venture account data to Mohan, joint venture account data to Babu. So by joint venture account data to Babu 9,000 we have written. So and that profit transfer, joint venture account data to Mohan and Babu, joint venture account data to Mohan and Babu 63,000, 42,000 profit transfer. So now here we have made double entry from the joint venture. And if you come to the credit side of the joint venture, Babu account data to joint venture, Babu account data to joint venture 12,000. So these are the transactions. So now let us close the Mohan's account. 2,33,000, you will be getting balancing figure 2,33,000. It should be settled through joint bank account. And Babu 1,01,000. So you'll be getting the balance 89,000. It should be settled through joint bank account. So and we have to close the co-venture account. After that, we have to prepare the joint bank account. The joint bank account should tally. So we have to make double entry. So here is there any so here come to the joint venture account. Joint venture account data to joint bank account. Joint venture account data to joint bank account 1,28,000 for expenses paid. So joint venture, so other there is no bank account. Joint bank account data to joint venture. Joint bank account data to joint venture, contract price realized 3 lakh. So finished. So here joint bank account data to co-venturers account. Joint bank account data to first co-venture Mohan 1 lakh, joint bank account data to second co-venture Babu 50,000 we have made. So now this double entry is over. So after that, so co-venture account data to joint bank account. So Mohan account and Babu account both are the co-venturers. So this is 2,33,89,000. So co-ventures account data to joint bank account 2,33,000 and 89,000. And so that's all. So then after making double entry, so this joint bank account should tally. So it becomes how much? 4,50,000. Both the side you should get 4,50,000. So this is about what joint venture account. After preparing a ledger account, now we have to pass the journal entries. So by seeing the ledger account, concentrate. Joint venture account data to joint bank 1,28,000. Joint venture account data to joint bank 1,28,000. Joint venture account data to Mohan. Joint venture account data to Mohan. Joint venture account data to Babu. Joint venture account data to Babu. So now joint bank account data to joint venture. Joint bank account data to joint venture. Babu account data to joint venture. Babu account data to joint venture. Joint venture account data to Mohan to Babu. Joint venture account data to Mohan to Babu. So if you come to here, everything we have already made double entry. So except two entries. Joint bank account data to co-ventures account. Joint bank account data to Mohan to Babu 1,50,000, 1,50,000 being capital introduced. So and for settlement, co-ventures account data to joint bank account. So co-ventures Mohan account data, Babu account data to joint bank account 2,33,000, 89,000, 3,22,000. So totally I have passed 8 journal entries according to this problem. So now I have completed. One problem, and second problem I will be analyzing. You have to do it by yourself. So A and B entered into a joint venture to produce film for the government. The government agrees to pay rupees 2 lakh. So this is the contract price or sales. A contributes 20,000 and B contributes 30,000. So this is the capital. It should be recorded in co-ventures account. These amounts are paid into joint bank account. Payments made out of joint bank account were purchase of equipment, hire of equipment, wages, material, other expenses. All these expenses are paid by joint bank account in joint venture to joint bank account. By adding all these expenses, you have to record. A paid rupees 4,000 as licensing fee. So A is paying out of his pocket to A. So 4,000. On completion, government paid the agreed amount. The equipment were taken over by whom? By B. So equipment were taken over B at a valuation of rupees 4,000. So now B is taking over the equipment. So it becomes what? By B in bracket what? Equipments taken over. In the first problem it was materials taken over, but here equipment taken over. Separate books were maintained for the joint venture whose profits were divided in the ratio of 2:3. So profit sharing ratio is 2:3. Pass journal entries and prepare the necessary ledger account. Similar to the first problem, so second problem it is you have to solve it by yourself and you have to pass the journal entry. So this is going to become first video or a second video. So first problem and second problem for assignment. First problem I have solved. Thank you.